On Friday, we saw the shorts getting squeezed as the indices starting to break through that declining trend line. We also have a short seller capitulating. Could this be signs of a top? And on Tuesday, there could be severe consequences if the government does not act quickly. Now, as we come over and look at the fear and greed index last week, especially on Friday, we were able to push the fear and greed index closer to neutral territory. Instead of hanging out near the lower end, we were able to rise up here just a bit. However, there are some troubling signs because when we come over and look at the most recent investor sentiment survey, we have one of the most bearish readings we've seen in quite some time. The bulls only came in at 25.4, and look, the bears were at 40.6. However, could this be a contrarian indicator, letting us know that markets are likely to bounce in the near future? Now, it wasn't just the bulls throwing in the towel, but we also have Hindenburg Research shuts down. This is one of the short sellers that took down Nikola and was responsible for calling out what they said were accounting irregularities out there with SMCI, and SMCI stock has dropped drastically ever since. So is Hindenburg throwing in the towel essentially a sign that a market top could be near? Because think about it, when markets top, this is normally when we see all the short sellers starting to capitulate, saying, you know what, this darn market is never going to go down. Just like when a stock finds a bottom like Carvana did when nobody wanted, Carvana's going bankrupt. Carvana went from a low price of roughly $3 all the way up to a recent price of $268. And this is what I'm talking about with Hindenburg Research basically throwing in the towel. However, we have more troubling signs. And no, I'm not talking about the inauguration that's going to take place on Monday. But speaking of Monday, let's not forget, Monday is going to be a bank holiday in the U.S., Martin Luther King Day. And essentially all week long, the U.S. has very little economic news. The first real piece of news we get out this week is going to be on Thursday. We have the weekly unemployment claims coming out, crude oil inventory numbers coming out. Then on Friday, we're going to start to get some PMI numbers and revised consumer sentiment and revised inflation expectations. But other than that, we have no major economic news. However, there is troubling news brewing up ahead, and that would be the fact that U.S. Treasury to launch measures to avoid debt limit breach on Tuesday. So one day after Orange Man takes office, we're at the debt limit. The first crisis is already here. Welcome, Mr. President, to your first day on the job. So now that we know that on Tuesday we're going to meet our debt limit, could Friday have been nothing more than a trap? Basically enticing new breakout traders of this declining trend line to go ahead and go long in the anticipation that the stock market is going to rally right back up to new all-time highs. Are they going to set a trap? Is the inauguration and everything else nothing more than a buy the rumor, sell the news? So once we have a new president, everybody's thinking everything is going to be fine, and then yank, there comes the rug being pulled out right from underneath of us. Well, if we come over real quick and we take a look at the SPY versus HYG being high yield bonds, one thing I want you guys to pay attention to is the chart up in the top is the SPY. And if you look at this prior swing point right over here, and you correlate that with this peak right here in the HYG, notice as the SPYs came back up towards that swing point this week, notice how much stronger the HYG has gotten. That's actually a bullish sign out here for the stock market. Then we look at the yield curve. We can see the yield curve has had quite the steepening as of lately, but then over the last couple sessions, starting to weaken back just a bit. Then we come over and look at the Dow theory sell signal, and that's going to be the Dow Jones up here on top, the transportation index on the bottom. We can see the transportation index is bouncing off that trend line that we broke out from, coming back, retesting it, and trying to head back up, kind of in a similar fashion to what we see out here with the Dow Jones. Now, something that we do want to pay attention to is going to be the volatility index. On Friday, it was down 3.86%. But if you notice, we are back into the 15 levels. And if we zoom this out a bit, if we start falling another 2 points or so, that would be an area where we most likely will start to see another volatility spike in the VIX. And we know that when the VIX spikes, that normally is not good out here for the stock market. We come over, look at the dollar index. On Friday, the dollar index was on the rise once again. We've already smashed that ABC target to the upside, but something that has not hit its ABC target yet is going to be the 10-year yield. Keep an eye on this. On Friday, we did form a hammer candle. We have an A to B equals C to D pattern, which completes up here at 5.03%. If we see the 10-year starting to rally up towards that level, that's probably going to be a little bit of a headwind out here for the stock market. Now, if you like a way to support the channel at no additional cost to yourself, check out the 3 prop firms I trade with: Apex Trader Funding, My Funded Futures, and Take Profit Trader. Right now, you can get the best deal out there using the promo codes and the links down below. Now, as we come over and take a look at gold real quick, gold came right back up towards this recent swing point, and now it has a much larger ABC pattern, which will bring gold all the way back up to new all-time highs at 2,815. As we come over and look at the SPY real quick, look at the candle we formed last week, a huge bullish engulfing type of candle. However, when we look at the MACD indicator on the weekly chart, does not look that strong. Now, you got to give it up for the bulls. The bulls were able to close the candle up in the upper third of the range, so that's going to be one check mark off for the bulls. Then as we drop down to the daily chart, we have that declining trend line we've been talking about for several weeks now. We not only got over that trend line, but we also closed above it. But look at the candle that formed. Basically a candle of indecision. We have a wick on the top and we have a wick on the bottom of that candle. And as we come over, look at the composite profile right here. Notice we basically wicked right back up into this high volume node. And if we look left, right near a prior swing point as well. Like we talked about earlier, we really have no major economic news to contend with this week, but we do have a large gap left out there from Friday, and we have a gap left behind from earlier this week. We look over here on the 4-hour chart, MACD right now still looks extremely strong. And when we dive down and start looking at the 30-minute chart, I got to be honest with you, MACD looks a little bit weak. We can see later on in the day, the market started to try to roll over here just a bit. Keep in mind, the futures markets will be opened on Monday. I do plan on streaming, and since there's likely going to be low liquidity in the markets, we got to be on the lookout for some potential quick moves in the market. Now, as we look at the profile, notice that we did have a gap up. Now, if you want to start playing this gap to the downside, then we want to look at value area low. If we can start getting below 597.38, then it makes sense to try to make a trade down towards gap support at about 595.60. and then potentially all the way down here filling the gap. Now, at some point in the future, both of these gaps are likely going to get filled. However, both of them probably won't be filled out here on Monday. Now, when we come over and look at the futures markets real quick, we have this massive move up, but here's going to be some key levels that I really want to focus on. And this is going to be this minus development area. I'm not saying we're going to make it there this week, but this is going to be an area that has my attention. And this zone is going to be anywhere from about 59.18 and a half up here to about 59.40. Now, if we look up just a little bit more, we also have a minus development area that formed right up here as well. And I'm really going to go ahead and count that anywhere from this candle wick just below the candle body. So I'm going to go ahead and mark that off real quick, zone that out. That will be a logical target location. Now, on the live stream, we also talked about a potential A to B equals C to D pattern. Well, once we broke above the B point right here, then we had a validated A to B equals C to D pattern that actually completes all the way up here at 6,135. Notice right below that level, we also have an untested point of control. But when we look just above us, if we are going to continue to push up, we need to pay attention. 6,082 would be a logical target to the upside. Now, there are two different ways that we can measure that ABC pattern. Some traders might want to use the low from the London session that night and measure it. That'd be a more conservative approach. That would give us a price target just shy of 6,100. And again, I still think there's a good shot we push up towards this high volume area. Now, we come over and start looking at the daily profiles. Keep in mind, we have this very large minus development area in a very similar location to what we saw on the weekly profiles. Now, as we look at this, keep in mind, Friday's volume profile shape was a P as in Paul, and the shape of the profile doesn't necessarily indicate bullish or bearish, but this profile is usually indicative of a short cover and rally, and that's basically what Friday's action was. Now, if you look at the volume profile real quick, we have value area high up here at 6,047.75. Now, if we can get above that price point on Monday and then we start coming back down, we can then look to target that point of control at 6,041.75 and then value area low down here at 6,024.75. Now, if we do not make it above value area high, a secondary game plan that we can have would be if we break value area low, we can look to target this minus development area that we marked off from the weekly profile And it's also a structure level. Out here on the 4-hour chart, look at this swing point here. We broke out from it. We have failed to come back and test that zone, which makes it a very high probability that we come back and hit that level this week. Now, as we come over, look at the QQQs out here on the weekly chart, we did not quite get a bullish engulfing candle like we saw in the SPY. We also look down here at the MACD indicator, and we can see that we actually have some MACD divergence. If I were to draw a trend line just connecting the peaks of the MACD indicator, we can see we are trending down, even though price is still very close near all-time highs. Now, if we look at the structure of the candle, we did close in the upper third of the range, which that would be a check mark off for the bulls. Then we jump over and take a look at the daily chart and look at the candle. Big, nasty hammer candle. Basically broke out, opened above this declining trend line. We wicked down below it. Boom, they rocketed right back up. Now, a hammer candle in the context of any type of uptrend, we got to be on high alert that could be nothing more than a hanging man candle, which could be part of a reversal pattern. We are going to hit the debt limits out here on Tuesday, and we're going to see, will the stock market have any negative reaction to the debt limits? On the daily chart, the MACD indicator is trying to cross to the upside. We're not quite there just yet. Now, if we can hold above this level, then it does make sense that most likely than not, we'll see a rally push all the way back to new all-time highs. But on the 30-minute chart, let's not forget on Friday, big, massive gap to the upside. And then earlier, we had a massive gap up in the week as well. So we have two very, very large gaps in the market. But notice the MACD indicator on the 30-minute chart. It has started to cross to the downside. Then as we come over and we start looking at the volume profile levels, if we can break below value area low, which will come in at 521.27, then I want to turn my attention either down towards these candle bodies at about 519.52 or at the actual low out here from Friday, which will come in at 518.95. Anything below that price point, I really would want to focus on assuming that we could come all the way down here, potentially fill in the gap, holding a runner all the way down for this secondary gap to be filled at about 505.02. Now, even if we do fill the gap from Friday, it does not mean the uptrend is over. Again, we have to take it one day at a time. We come over and start looking at the 4-hour chart on the NASDAQ. We can see we've had that strong push up. And as we start looking, we basically just fell a little bit shy of really getting into this volume area on the composite profile. Now, if we go ahead and we measure out an A to B equals C to D pattern, since we did take out the B point, we can see that that pattern actually completes just shy of this untested point of control at 21,982 and a quarter. The ABC pattern actually completes at 21,965. So for upside targets, this would be a logical target. But if we start to get a pullback as early as this week, then one of the areas off the weekly chart I want to focus on would be this high volume node at about 21,488. Also, if we look left, it's right near a structure level we broke out from, and we really have not come back and repaired that area just yet. Out here on the daily profile, we can see we had that same P as in Paul shaped profile, but as we start getting below value area low, we have several minus development areas that at some point in the future are likely going to come back and get tested. Now, as we look at the volume profile levels, 21,530 will be value area low. We start breaking that level, then I really want to turn my attention to really trying to target somewhere around 21,453 into this minus development area. Anything below that price point, we got to remember we have this large minus development area that was left behind from the CPI data. And as we start to come back into this area, I would expect that we come back into it, and at some point we will fill that entire range. The entire range will come all the way down to 21,016 up to a price point of about 21,164. So that's quite a large minus development area that we have. Now, when we talk about the volume profile levels, 21,639.50 will be value area high. The point of control will be 21,622.00 with value area low being 21,530.00. Now, if we can break and hold above value area high, that's when I want to turn my attention to some of these upper targets, the ABC pattern, the untested point of control. But before we get there, we could also look to target this volume area of the profile in the composite about 21,734 up to about 21,780. Now, before you decide to trade with Take Profit Trader, make sure to watch this video right here.